Hey, good morning, everyone, and welcome to the first trading day of the year, January 4th, 2016. I am Frank Ochoa, aka Pivot Boss, and this is your Pivot Boss Pre Market Report. We're going to take a look at the ES here in a daily time frame to begin things. What we're going to be looking for to begin the month is this key range right here, 1991 to 2102.75. We have a midpoint at 2046.75. That's the impulse range that began in early November and has continued to trade and develop within that range. And so far, bears have taken over here, defended the midpoint of that range, and so far in pre-market trading, we've already reached, for all intents and purposes, our primary bear target for the week, which is 1994, the weekly ADR target. One thing to keep in mind here is if price comes into 1991 or as low as 1981.5, which is this composite low volume node here, that's going to be the area where I believe bulls would want to come in and defend for a shot at returning price back toward the top of the range and this HVN at 2072s. Any failure to hold above 1981.5 would suggest further downside expansion, likely into the 25% expansion range at the 1935. Rather, that's the 50% expansion range, 1935, with a shot to see a full-on continuation into 1879s. Eventually, we're going to see significant expansion from this range. That's the key point here. But until that occurs, expect for a potential reversal back in the range. Once we do see expansion, it will be significant, and we will likely see a solid push in the direction toward these expansion targets. If we take a look here at crude oil in a daily time frame now, you can see how crude oil has been holding within a tiny range at these lows here from 35 up to about 39s. That range has coiled significantly, and that range is formed below the impulse range that formed from August into the end of August there, from 40.69 up to 52.47. That's the impulse range that we've been following. You can see 40.69 here. Once price went offered through that area, a pullback was defended, and then you saw further expansion to the downside since. Now we have a composite VPOC that has shifted up from 36.04 up to 36.88, and that is basically the HVN that price is trading around right now. So overall, the fact that price broke below the bottom of that impulse range and is now holding at those lows implies that we will likely see further overall downside price discovery. Any pullback into 40.69 will likely be seen as a selling opportunity by bears looking to defend pullbacks for another wave of weakness. Eventually, we're going to see expansion from this range. Until then, we could see chop back and forth, but watch for expansion from this narrow range for near-term direction. A break to the upside would allow bears to come in and defend for another shot at new lows. Above 40.69 would imply a return to 43.18 and 46.58. Let's take a look now at gold futures. Gold futures here looks very similar to crude oil in that it broke below its impulse range as well. So here's the key range that we're watching in gold futures: 1077.90 up to 1169.70. Earlier in October, price attempted to hold above that 1169s, and when it failed, I mentioned that that was an indication we would likely see a move across the range, and that's what happened. Now prices are holding within this range that has formed from basically 1045 up to 1088, and that narrow range there will likely see significant expansion at some point. Until then, there could be more chop as price is trading around composite VPOC at 1070.5. So look to avoid the chop around composite VPOC and look to fade the edges of the range. Once we do see expansion from this range, look for a big time move somewhere around 75 to 100 points of range once expansion from this range occurs. So we're going to continue to watch this area very closely. Keep in mind, this is 1077.90, the bottom of the range. So if price pops back above that area and finds acceptance, that could imply another move back toward 1169s. Failure to get back above 1077.90 would imply continuation toward 1009 and perhaps lower. Lastly, let's take a look at the NQ here. The NQ in a daily time frame shows price is holding within its key range as well. This range spans from 44.49 up to 47.23. That's important there. That's the November range that we've been watching. Once that impulse low formed, I mentioned that we could see further trading range activity into the new year, and that's what occurred in that instance. Obviously, now prices are looking for either a return back to the top of the range as bulls defend the low volume node in the bottom of the impulse range here at 44.49, and a failure to hold above that level would open up a clean move of expansion into key targets at 43.11.5 and 41.74 So right now, expect bulls to defend this LVN and the bottom of the impulse range at 44.49 upon first test for a shot at reversing course back toward 4,700. Failure to hold that range would imply expansion ahead. All right, let's see how this thing plays out heading into the new month of trading for 2016. Good luck and trade well.